Hi folks, Nick Shaheen here recapping the week ending 9/11. Week ended on a green note. We have green candles for the indices. First of all, the Friday was green all over the place as far as indices are concerned, led primarily by Apple and other mega caps. As far as the weekly is concerned, we have green candles on the SPY, green candle on the Qs, the NASDAQ, and the small caps, the IWM. So going into next week, by the way, Friday wasn't without its scary moments. Intraday, there was some, fear as far as the outcome of the day. The pre-open went from green to red. So there's um, nobody believes in their stance because fundamentals are hostage to the Fed event, which comes next week. Which brings me to next week. It's going to be all about the bulls and their sources of hopium, mainly from the Fed. The bulls need something to buy. People are saying we're buy the dip buyers and buy the dip, buy the dip. It's not happening these days much. Because what are they going to buy? There's no hope of this, no hope of that. They need hope, and the Fed may provide it. I don't believe they should, but they may. So it is a binary event. I can guarantee you that from my, testing the market out there on Twitter, in the Twitter sphere, who believes that they're going to move or not. But so I look at the two possibilities. If they move and hike, we will sell out. First of all, anybody that tells you that it's baked in, the decision is baked in, they're never baked in, ever, okay? The move will happen. The direction is unknown. It's a coin flip. That's why we call it a binary event. So what do? A fundamental trader, I make sure that my portfolio can withstand both outcomes, meaning I won't have any weeklies as far as credit spreads is concerned. If I have long stocks, I make sure to buy some protection. If I'm short this spread or short that spread, I make sure it's well protected. Anyway, I have to make room for both outcomes, potential outcomes. All right, so what are the potential outcomes? If the Fed moves on rate, it does not move on rate. Say no rate hike in September. So the one is if they say no rate hike in September and they say nothing else, meaning they leave ambiguous, they hide behind this ambiguous data-dependent stuff, and they don't introduce the fact that, hey, we're looking at China and we're worried about global event, then we will pop. We will maybe pop for 2 days, maybe up to 5%. But those are shortable pops because they happen because something bad didn't happen. Okay, they didn't raise rates. Kind of like the March-April, the March when they said no rate hike in April. We ran and then anyway. So I would be looking to start shorting it, but I'll give it room. Now, if they say no rate hike and then they say we are so looking at the global, China and this and Brazil, all of these, we were going to wait until all of them smooth out, meaning that they're not going to raise this year. If they give this clear, then the run-up will be longer. The spike will last longer, and I won't be so quick to short it, and I will book some short profits because I have a lot. And I may cover some shorts that I recently took just to balance out my portfolio. So those are the outcome. But in either case, I make room for the moves. I don't chase. I don't panic. I just be cautious. And that's it. As far as the ranges, all indices have breakout and breakdown zones. And for these zones, you can consult your charts or you can message me for more information about that. The bottom line is for next week, I want to be ready for both outcomes. A few stocks stuck out to me. GoPro today, I can't believe I'm saying this. I am like the guy that was saying no, 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 all the way down. You can read the notes, that's what they say. And I had a goal of here, target, and it not only met my target, but exceeded it. So I said, all right, let's zoom out to all data I have. This is since inception. So the only place it has to go is the IPO. And my gamble on the markets, if the markets stabilize, and rally. Not a lot. GoPro may have some fans that come out of the woodwork and say, okay, let's buy it. So I went long via debit call spread. I mean, actually, debit calls? Anyway, small money, risk, like a lottery ticket. Banking, it expires next week. If it pops, so be it. If not, and actually the other option was to go longer, and in fact I did both, and give it some time. So October, November, and then you can choose there. Another similar situation is with Twitter on a hunch. Both of these are lottery, meaning money I've already thrown down the drain. I'm not worried about it. And Twitter, somebody will figure it out, and I have a hunch that by next week it may spike, whether on a headline or whatever. I took some long calls that if it spikes, I stand to gain a lot of money. My risk, 8 cents per contract. So, and this is a short-term play. Long-term, I think it can recover, and it will be an asset for somebody, whether with Twitter or without Twitter. The platform itself is too important for it to die. All right. As far as other tickers, the flip side of things, not every knife is worth catching. Here's Yelp. This is what is it? 5 years. It's over 4 years, nothing happened. Like we're back into the same price ranges here. Again, this warned, and we posted a lot of levels along the way. We said, wait, technically, looks bad, wait, boom, here we are. This is a knife I'm not interested in catching. All right, folks, Nick signing out. For any questions, let me know. You know where to reach me.